Welcome back. The markets right there. No incremental change from when we took that break. Navin Agarwal is Managing Director of Motilal Oswal Financial Services, and he's joining us exclusively to talk about the numbers which came out last evening. And of course, there was a press conference earlier on as well. Navin, thank you very much. Good morning. Could you talk to us about the very strong performance? I mean, 90% growth in net profits. EBITDA is up 84%. I mean, of course, I'm looking at year-on-year numbers. The situation was, I guess, vastly better in Jan to March this year as compared to Jan to March last year. But really, I mean, which segment drove business for you?
Hi, good morning. We had very strong performances across all our key businesses during the current quarter. Firstly, the home finance business had disbursements of about 920 crores during the current quarter and 2,400 crores for the year as a whole, resulting in a loan book of 4,100 crores as of March 2017, which is nearly a doubling of the loan book compared to the 2,100 crore loan book as of March 2016. Likewise, our asset management business saw a very strong growth. We had net sales during the March quarter alone of 1,900 crores, taking up the full year net sales to 5,700 crores. And our assets under management for the asset management business were at 20,000 crores as of March of 2017 compared to 10,000 crores in March of 2016. So there is a doubling of AUM in the asset management business as well. And thirdly, we've seen very strong growth rate in our capital market businesses, where the year as a whole saw nearly 30% growth in the broking business and 80% growth in the profit after taxes, led by significant operating leverage as we had added meaningfully to our manpower, to our distribution network, and invested in technology in the preceding year. So basically, it is an all-round performance led by the home finance business, led by the asset management business, and led by the capital markets businesses, including the investment banking business.
Okay. Mr. Agarwal, exactly that. The mix of Motilal is changing quite rapidly. You're moving away, or capital markets is becoming less of a component, whereas housing finance and other segments such as, say, asset management is increasing. So can you tell us, say, 1 year down the line, what will the mix look like? Capital markets, especially compared to, say, housing finance and the other newer businesses?
So firstly, we are continuing to see very strong growth in the core capital market business. As I mentioned, there was a top line growth of 30% in the broking businesses, a profit growth of 80%, blockbuster performance of the investment banking business. Also, what is happening in our capital market business is that distribution of financial products, assets doubled year on year to about 4,500 crores. So the capital market businesses are doing very well, firstly. But having said that, given the small scale of the home finance company today, we were actively present in only 3 states in this year. And at the end of this year, we are now present in 9 states. We had 51 branches at the end of last year. We now have 120 branches at the end of this year. We had under 500 employees in this business last year. We've ended this year at over 1,000 employees in this business. So given the disbursement of 920 crores in the fourth quarter on a closing loan book of 4,100 crores provide, visibility of very strong growth in this business for the next year. Similarly, for our asset management business, we've closed at an AUM of 20,000 crores, while our last quarter inflow alone is 1,900 crores.
Okay.
So there again, we've doubled our branding and advertising expenses. So we're looking at very strong growth in these linear revenue streams, which is the home finance business as well as the asset management businesses.
Right. Now, just a couple of points. The PMS business comes under, you classify that under the asset management business? That is part of it?
That's correct.
Okay. Would you continue to...
the 20,000 crores of assets under management include all 3.
I think in one of the PMS schemes, you would kind of close the scheme because the scheme itself had become pretty large. right? Now, I mean, is that at some point do you need to take those business decisions, Naveen? Because I mean, markets being where they are, and the amount of money which is coming in, I mean, you get handed over the money, one struggles to sit on cash. I mean, you have to deploy it. So will we see more of these kind of decisions? I mean, obviously not in the open schemes, mutual fund schemes. And second, the home finance book is doubled, you said. I mean, while that is great, but is that that pace is really scorching? The numbers are, the base was small, 2,500 crores last year, but you're kind of it kind of shows you are aggressively pursuing opportunities to lend in that segment, or I mean that opportunity is right there and you're able to lend without really lowering your standards or anything of that sort?
Yeah, so answering your first question on the asset management business, we have been in this business for the last 14 years, particularly the managed accounts or the PMS business has a 14-year track record of a 25% post-tax, post-fees return in the oldest scheme and an alpha over the benchmark of over 8%. We are very conscious of the returns that we have to deliver to the investors, and we took this decision that given that the next $1 trillion opportunity scheme is predominantly a mid and a small cap scheme, which had touched assets of nearly $1 billion. We took the decision of shutting incremental flows into this product, as we are very conscious of the returns that we have to offer to the investors. But we have a whole bunch of other products, including our large cap products, including other small cap products, including multi cap products, which are open for investments. And so the distributors have enough products on hand to offer to investors. But this particular scheme got very large in size, and given the mid and small cap focus of the scheme, we decided to shut it down. And as and when we need to make these decisions, we will not hesitate to make them, even if it comes at the cost of growing your AUMs. Turning to the home finance business, this is only the third year of operation for the home finance company, and the disbursements during the current year ending March 2017 were 2,400 crores. This compares with disbursements of about 1,800 crores in the last year. So the disbursements of the home finance company grew at about 33% in FY17, which is not a very extraordinary growth. The only problem is that the denominator of loan book in the second year of operation is a small 2,100 crores, and that is why it looks like a doubling of loan book. So it is more mathematical. But if you look at the disbursement growth year over year, it is basically a growth from 1,800 crores to 2,400 crores.
Okay, fair enough. Naveen, we've completely run out of time, but a pleasure speaking with you. Thank you very much for joining in and taking us through the Motilal numbers. The stock bit subdued, down around 2% odd. We need to take a break, but as CNBC TV18 celebrates Akshaya Tritiya today,